Okay, so somebody in the option stalker chat asked Dave why he exited VKTX yesterday for a win when it was clearly looking bullish and good and the market was very strong as well. And I'm going to try my best to explain why, because I think he exited it at the perfect time for a variety of reasons. So I'm going to go through this step by step. I'm going to go through why he entered it, and then I'm going to go through what I think is his thought process for exiting it as well. I'm sure he won't have the exact same reasoning, but I'm going to try my best to explain this because it helps me learn too. So Dave entered the trade right here on this day. So VKTX is very, very bullish. If you look at this thing, that's crazy ATR. That's a huge mover. It's a big green candle right over the 200 SMA, just ripping through, just nonstop HA continuation right through there. And then you also got insane relative volume, insane relative strength, insane relative volume. The sector is biotechnology, so this clearly was some sort of positive news catalyst. Usually it's like an FDA approval or some sort of trial was successful on a drug that they're hoping to do. Biotechnologies are really like they're like all or nothing. They're either going to win the lottery, or they're going to just crash and burn and be just like a piece of shit ticker. So that's why he entered it. And I'm guessing on this day he entered kind of like around in this area right through there. Like that's the area where I would have entered, and he probably just saw how bullish it was. Maybe he entered like right there. Maybe that little like bounce off VWAP right through there, but somewhere around in there, that area is my guess. So let's mark this thing up and try to figure out like where institutional buying patterns may be existing here and where all the big money is kind of pushing things around here. We're going to do our best guess here. So first of all, let's just look at the TA of the chart. Like obviously there's a level here. This is the 200 SMA. Hang on, I'm going to try to do a different type of drawing. There we go. Okay. 200 SMA right there, obviously. The 8 EMA is something that gets used very often. The reason why I think 8 EMAs are so useful is because they're approximations of anchored volume weighted average prices, which institutions definitely use. And you don't have to find them. Now, obviously this is nuts. So that's going to be an anchored VWAP. That's some sort of event. This one right through here is probably one, but not as much, because usually you'll put an anchored VWAP on some sort of event if it like succeeds breaking through a significant area. And it broke through the 200, but here it didn't really. But the volume on it tells you that something's going on. And then I would put one here too, because it's a 200 SMA break. It actually is high volume. So if you weren't looking at the rest of this over here, this would look like really big high volume. And this probably was a positive news catalyst. I'm not looking at it right now, but you can guess that the news got announced through here or through here. And then some people probably knew kind of about it here and started buying right away. So these are our support levels. So I'm going to put like a little line on each one of them. And on TC2000, these anchored VWAPs, they don't work as effectively. Like they're off a little bit on the D1 versus the intraday. We're going to use the intraday right through here, right through here. So these are all of our like lines of support in the sand. And based on what you see and contextually, you can use any one of these as a mental stop. Now, if you have options, like a drop from 17 down to 15 is 12%. That's a pretty significant drop. So you might not want to use that, or you might. Who knows? Maybe your sizing's small. But Dave probably was using maybe like the halfway point of this candle, or maybe the 8 EMA, or maybe even like the 200 SMA as well, because if this whole thing reversed, that meant that whatever caused people to start buying is no longer a thing that they care about. So now we're watching this thing slowly grind up. And you have to remember with biotech stocks, they don't care about the market. So you might have been thinking, okay, the market's bullish now. Friday was bullish. Why am I not still staying in this stock? Like we're probably going up more. It's biotech. Biotech stocks follow their own TA and their own news. They don't really follow the market. They're market agnostic. And honestly, that's probably why he took it in the first place. Because when he took it back there, SPY looks like crap. This is the most disgusting, sorry for all the lines, but this is like a terrible compression. It's just dog shit. Look at this. So he doesn't need the market to support his trade to take a biotech stock like that. The biotech stock is going to do its own thing. So let's go back to this. So now he's watching it slowly grind up, but the way it's grinding up is it keeps banging into this upward trend line and pulling all the way back. So what's possible is that an H plus algo line could be forming. So if we drew one of those, connecting all of the lines through here, let me see. Okay, that's this day all the way to there. So we're going to use this point right through here, and we're going to draw it up through there. So this is potentially where an H plus algo line was starting to form, right? So he's coming into this thing, and like this is the start of Friday. It's already been rejected 1, 2, 3 times, but it's upsloping. So it's not that big a deal. It's upsloping. And with upsloping algo lines, you can kind of keep into them. Like a lot of times they're channels and they'll just break through to the top and you take profits up in the breakthrough and you're good to go. Now, if you have a downsloping algo line, that means every time you get rejected, you're going to reject lower down every time. So your profit target keeps dropping down and down. But on an upsloping, your profit target keeps going up. Same for support. So those types of trades are advantageous. They're not as big a deal. But if we zoomed out on the D1, where would the next big resistance be? Well, this thing is, let's see how old this thing is. Yeah, this thing is nowhere near at the high, all-time high or anything like that. We got to take a look at kind of what's going on up in here to see if there's any sort of overhead resistance that this thing might bang into. So let's see where all the volume happened, because that's usually where all the shares are. So if we look at that level right through there, we could take a couple of these. Like I could use this pivot here or this pivot here. There's a good chunk of volume through there. I could kind of just use that pivot, use that pivot. Like there's a lot happening through there. There's something, there's enough resistance. So you know that as this thing is grinding against this upsloping resistance, it's about to meet downsloping resistance, or not downsloping, but it's about to meet like old resistance, and they're going to team up together. So you have this resistance, but then you have that resistance, and now it's going to be like double sell. So on the way up, this thing is getting sold off fairly aggressively. It's not like against it and just kind of like grind, just waiting for the breakup. It's pounding back down to the anchored VWAP every time. It's getting rejected every time. So as soon as this gets a buddy, boom, it might be able to hammer it down even further. And you're seeing all these wicks all the way up. Now here's the last piece of the puzzle that I think Dave used to take his profits. Not only were we kind of coming up into that area, so we knew that resistance was likely or potentially going to increase, which might make them break through down to support at a lower level. But look at the way this thing went up the last time to test. That's kind of climactic, right? So it's not like just grinding all the way up at the top, just chilling. It just went for this like reach. It went to try to just like jump up and touch the rim of the basketball net and then come right back down. The way something approaches resistance is very important. Now, if it's a strong bullish trend, grinds a little bit strong, grinds strong, and you have these nice high volume pushes up, you can expect it to break. But if you have this single just like, oh geez, one last time, let's try to get there, that's really far extended right out the gate on a very volatile morning. Now, I know biotech stocks are not really that, they're not really that market sensitive, but look at what the market did. Look what SPY did. So I'm going to trace over this. So you got VKTX doing kind of the same thing. So open, bam, bam, bam. We're reaching up through to there. This is the highest point that VKTX reached. And then back down. So it looked kind of like SPY was doing not what we expected. We were really excited through here. But it turns out that was probably just an algo from the news. And then breakdown. So that, you know, even though biotechs are strong, that probably didn't help it. Okay, so it's a long video, but hopefully that sums it up. And he probably did this in like 10 seconds looking at it. Okay, so VKTX, the reason why he sold with profits was because of how it looked like overhead resistance was forming and how delicate the buying action was. It wasn't that durable by the time it got there. That's why he sold.